All right, so fintech, right?
Yeah,
It's shaking things up,
absolutely.
changing how we think about investing,
For sure.
making it easier for everyday people
Yeah.
like us to get involved.
Democratizing finance, they call it.
Exactly.
And, when Robinhood came on the scene,
Oh, yeah.
they were like the poster child for this whole movement.
Zero commissions, that slick app.
It felt like they were taking on Wall Street, giving power back to the people.
Like the Robinhood of investing.
Yeah, exactly.
But things haven't exactly gone smoothly for them, have they?
No, not exactly.
I mean, they just agreed to this massive $45 million settlement with the SEC.
Yeah, that's not chump change.
Not at all.
Hmm.
And it's not just about the money, right?
Right.
There's a data breach involved, allegations of misleading customers.
It's a bit of a mess.
It's a long way from that steal from the rich, give to the poor image they were going for.
Yeah, the shine is definitely worn off. It's interesting how quickly things can change, especially in the fast-paced world of fintech.
So let's deep dive into this, shall we? Let's start with the data breach. Late 2021, millions of Robinhood users had their personal information compromised.
Huge breach.
Emails, phone numbers. For some, it was even worse.
Yeah, some had even more sensitive data exposed.
Now, from a cybersecurity standpoint, what does this tell us about Robinhood?
Well, this isn't just an oops moment, right?
Right.
We're talking about a company that handles incredibly sensitive data, people's finances.
Their livelihoods.
Exactly. And this breach exposed some real vulnerabilities in their system.
So it makes you wonder, if they can't protect basic information, what about the really important stuff?
That's the question, isn't it?
All right, so data breach, not good.
Mhm.
But then there's the SEC investigation. What were they looking into?
Okay, so the SEC, the Securities and Exchange Commission, they're the watchdogs of the stock market. They're there to ensure everyone's playing by the rules.
Right.
And in Robinhood's case, they were specifically looking into how Robinhood was routing trades.
Routing trades.
Yeah, so basically, when you buy or sell a stock on Robinhood, your order doesn't just magically happen. It gets sent to a bigger firm to be executed.
Okay.
And what the SEC found was that Robinhood wasn't exactly transparent about how they were choosing these firms or how much they were profiting from these arrangements.
So it wasn't as simple as zero commission trades like they advertised.
Not quite, and that's where the issue of transparency comes in. Robinhood built its entire brand on this idea of being upfront with the everyday investor, empowering them.
Right.
But if they're not being completely clear about how trades are being handled behind the scenes, it kind of undermines that whole ethos, doesn't it? Makes you wonder if they were really putting their users' interests first.
It does make you wonder, and this wasn't their first stumble. Remember the whole GameStop fiasco?
Oh, yeah, that was a big one.
Their app crashed during some pretty crucial trading days.
Mm.
Not exactly a confidence booster.
Definitely not. And, that situation highlighted a potential conflict for Robinhood, right? On the one hand, they're promising open access to the market for everyone.
Democratizing finance.
Right. But on the other hand, it showed their struggle to handle high-volume trading when things got really heated.
Interesting.
Yeah.
So how did Robinhood respond to the SEC investigation? Did they admit any wrongdoing?
Well, they agreed to pay the $45 million to settle, but they didn't actually admit to doing anything wrong. They issued some statements emphasizing their commitment to improving security and transparency. But as they say, actions speak louder than words, right?
Absolutely. But honestly, $45 million, that's probably a drop in the bucket for a company like Robinhood, right?
Right.
Will this actually change anything?
That's the big question, isn't it? The financial penalty might not be a huge blow for them, but the real cost, the lasting damage, might be much bigger.
In what way?
This whole saga has seriously eroded user trust, and trust, once it's gone, is incredibly difficult to win back.
That's true. So let's bring it back to our listeners. What does all of this mean for someone who uses or is thinking about using a platform like Robinhood?
I think this entire deep dive is a reminder that we need to be really careful, really informed, especially when it comes to our money and our data.
Right.
You can't just take things at face value. Fintech is exciting, it's innovative, but it's not without risks. So ask questions, do your research, read the fine print, and understand how these platforms work before you entrust them with your hard-earned cash.
Couldn't agree more. And this isn't just a Robinhood issue, is it? This conversation about responsibility, about transparency, it's relevant for the entire fintech industry, right?
Oh, absolutely.
So where do we go from here? What can both companies and users do to ensure that innovation and ethics go hand in hand in this rapidly evolving financial landscape.
That's the challenge, isn't it? Finding that balance. It's going to require a real effort from both sides. Users need to educate themselves, be vigilant, and demand more from the companies they trust. And companies, they need to be held accountable. They need to prioritize security, transparency, and genuinely putting their users' interests first. It's a work in progress for sure, but the future of fintech depends on getting this right.
Absolutely. Well said. I hope this deep dive has been informative for everyone listening. Keep exploring, keep asking questions, and stay informed. This is a fascinating space to watch, that's for sure.
Definitely is.
All right, that's all the time we have for today. Until next time.
Take care.
Bye.
See you.